Spot bags, derivatives, perpetual contracts, swaps, meme coins, alts, alpha. Plenty of words will be thrown at you the second you enter the crypto markets. But what do they actually mean? More importantly, how do you profit from knowing them? That's what we'll cover in today's video, so stay tuned.
Meme away. We're escaping the matrix.
Jam. Welcome back to my channel. Today, we'll be covering 3 of the main ways of how to make money in the crypto space. And I'll give you some key beginner tips along the way, so you don't get completely rocked on your very first transaction. Most people think crypto is about gambling or finding the next 100x meme coin, but the real G's know it's about understanding the system and cleverly using that system to your advantage. And that's what we cover today. So let's break it down. First off, we have crypto spot investing. When people talk about spot investing, they talk about buying a coin, holding that coin, and selling it later at a higher price. It is the simplest way of making money in the crypto industry. Simple by execution. Not so simple by actually doing it, because you might bet on the wrong horse, right? How does spot investing work? Well, for most people, you will take some fiat money, so euros, dollars, GBP, or whatever, from your personal bank account and transfer it to a centralized exchange, CEX. You will often see that abbreviation, so keep that in mind. Along the way, I will edit in some screenshots of how things might look. I'll show it to you from the Bybit side of use, because that's what I personally use. But there's a bunch of exchanges. You have Binance, you have Coinbase, you have Kraken, you have a lot. Do your own research on your exchange if it's actually safe and if they are liquid. Now, most of the time you will find a button, a big button that says buy crypto. You can't miss it. Choose the amount of money you want to spend into that crypto. You will choose the crypto, of course. You'll click buy, and congratulations, you now hold crypto. But it's not that simple, because in crypto we have a saying, not your keys, not your coins. As long as your coins are on the exchange, they do not fully belong to you. The exchange has them and has custodial rights. So the exchange holds them for you. But in a world where we want to go against centralization and we don't want to give power to one company or a bank, it doesn't make much sense to keep our whole money in an exchange then, right? So how do we counter that? Well, as you would in real life if you have cash, you will get a wallet. What is a wallet? A wallet is basically just an application where you can store your cryptos. There's hot wallets and there's cold wallets. Cold wallets are completely off the grid. They are a physical tool that you have that holds your cryptocurrencies. They are not connected to the internet. Hot wallets are connected to the internet and are normally software. Also, wallets are normally designed for one or multiple blockchains. So you might want to figure out what the best wallet for your blockchain is for the crypto that you're holding. When I was talking about not your keys, not your coins, what did I mean by that? Well, if you create a wallet, popular options hereby are MetaMask, mainly developed for the Ethereum blockchain, and Phantom, mainly developed for the Solana blockchain. If you create your wallet, you will have 2 keys, your public key and your private key. Your public key is just your address. It's a code out of numbers and letters. It's very long and you normally can only copy and paste it. You will never memorize that, unless you have photographic memory, of course. And that key is like your address. It is where people will send money to if they want to send money to you. It is also where the exchange will send your coins to once you decide to withdraw them from the exchange. That is public, that's fine. Everybody can know it. Well, if somebody wants to send you, a whole Bitcoin, let them. The private key on the other side, you should never, ever tell anyone else. Because the private key is like a password. It is your access to your wallet. If you lose that, well, you lose access to your wallet. And by that, your coins. To get back to exchanges, think of them as middlemen. They are there to sell you the crypto that you want. They shouldn't be there to hold your crypto. Exchanges can always freeze your funds or go bankrupt overnight. Just ask anyone who had money on FTX. They will tell you to not have all of your coins on exchanges. Some surely, to be liquid. Because obviously, you will get them back on an exchange to sell your coins at one point. But don't keep all of your coins on the exchange. For a lot of you, spot investing might sound boring. Because, well, in the case of Bitcoin, we're currently standing at 87,000. Let us assume you buy an entire Bitcoin. And, in the next bear market it goes down, and the bull market it goes up again, and it will only hit 150k, and in 4 years or something you will only have made $36,000 to invest at 87, right? So that might sound boring, but real G's know. Slow and steady wins the race. This is how silent millionaires are made. That's what you're aiming for. Perpetual futures trading, the high risk, high reward game. Now let's get to all our degens out there, all the people that like to live on the risky side. First off, what is a derivative? Well, you can imagine a derivative as a bet that you enter with your broker on whether prices will rise or fall. It gives you the opportunity to go long. If you go long, you guess that prices are going up. And if you go short, you think that prices are going down. When you buy perpetual futures contracts, you don't actually ever own a coin. You own the derivative. You own this contract. It is basically just an agreement between you and your broker that at one point your broker will sell you a coin and you will buy it. It will eventually happen. That is what a future is. A future would have a date at which this would happen. With perpetual futures contracts, there's just no date where it will happen. So you could have that forever if you wanted. Probably not the best idea, because funding rate. Now what is a funding rate? Well, every day, and actually every hour, exchanges check, okay, what is the difference between the perpetual future contracts price and the actual spot price? And then there will be calculated the funding rate. When the funding rate is negative, then people that are long are getting paid by the people that are short. So the people that are short, that are now probably in the green, in profit, are now paying you for your long position. That in theory, because prices are dropping, should be in the red, and vice versa. Perpetual futures trading also brings one more thing: leverage. And leverage is what the degens love. Leverage is what makes crypto so great. Actually, every form of derivatives. But it also makes it inherently dangerous. Now, first of all, I'm not a friend of the demonization that's going around on leverage. Perfectly fine to use leverage if you know what you're doing. If it's your first time in the crypto markets, if it's your very first transaction and your first time having anything, probably using leverage isn't smart. What does leverage do? It just basically multiplies your position. So let's say you want to open a position that is worth $10,000. You only have $1,000. You will open a position with a 10x leverage. So your exchange will borrow you $9,000 so you can open the position. Now let's imagine you're right and you went long and prices go up by 10%. The price of the asset went up by 10%. Your position is now up 100%. So you are now in profit $1,000. You doubled your money. But let's imagine you're wrong and prices drop by 10%. Then you lost 100% of your money. Your $1,000 are completely gone and your position gets closed. That's the liquidation level. The liquidation level is the level where the position is so much in the negative that it would take your entire capital away from you. That way exchanges prevent from losing the money that they borrow to you, right? I wouldn't avoid using leverage, but I also really wouldn't get into it if I'm new to crypto, if I have no clue what is happening in the markets, and if I don't have a strategy. Because crypto assets are very, very volatile. You know, you don't even necessarily need to be wrong about the direction. It could just happen that some news gets dropped and there's a flush sweep that takes out everything on the bottom. You get taken out as well and goes straight back up and continues to go in the direction that you predicted. You were right and you still lost all your money. Think about that before using leverage. When using leverage, it is also important to always set a stop loss. Stop loss will basically close your position at a certain level that you have predetermined. And that will prevent you from getting liquidated, which means that you lose all your money. No exceptions to that. Always have a stop loss when trading with leverage. And use low leverages, man. Like, what is this? I see 16-year-olds out there do 100x long on Solana. Like, guys, please. I have to go a bit out of character here. Stop the nonsense. 50x, if you're a baller, I guess. But 100x leverage, nobody needs 100x leverage. It just ruins you faster than you can see. So don't do that. Also, study liquidation maps. This is where all the whales are hunting the smaller traders because they know where to get them. and only trade high conviction narratives. Don't just trade some random coin you just saw on TikTok today. These guys, please. However, after going on this little rant, with great leverage comes great responsibility. If you master it, you can leave your 9 to 5 for good. And actually, a lot of people have mastered it and make a significant amount of money trading perps. There's a lot of communities out there that you will find a lot of information on. I've already prepared a video for you that goes much more in depth on perpetual futures and the trading of those. So make sure you're subscribed because they are coming up. Today we'll only briefly touch all of these points: spot investing, perpetual futures contracts trading, and we go slightly into DeFi. So make sure you're subscribed to see much more detail about all of these things. Now, last but not least, DeFi, the silent yield machine. Now here's where the game really starts. While everyone is chasing quick flips, and like getting these thousands X's, the smart money is farming passive income 24/7 in DeFi. DeFi stands for decentralized finance, a whole financial system that runs without banks or middlemen. There are three main ways to make money in DeFi. First of all, we have swapping. Swapping is like exchanging one coin for another, but without using an exchange. You use DEXs, decentralized exchanges, as we mentioned in the intro, like Uniswap or Radium, for example. There's a bunch of them. There's just a million out there. But here's the alpha. Always check the slippage before swapping. Some projects will rock you silently through bad liquidity pools, so you lose all your money and you don't even know how you lost it all. Swapping is also what is done when people talk about meme coin trading. That's not trading, that's swapping. You swap Solana, in most cases, for a meme coin. Swapping. It's DeFi. It's different. It's different. Second of all, we have staking. Now, what is staking? A lot of blockchains out there, like for example Solana, Sui, Ethereum, use not the proof of work consensus that Bitcoin has, but they use the proof of staking consensus. So when new transactions are validated, they are validated by devices that are connected to the network and have staked their coins. Your phone is validating transactions on the blockchain. Now for that, you're rewarded with new cryptocurrencies. Now the amount of coins that you have staked gives you priority. So the more coins you have staked, the higher your chance of getting picked as a validator and therefore also earning more coins. Little roadmap and little quick alpha. If you want to stake Sol, do it on Phantom. If you want to stake ETH, do it on Lido. And if you want to stake Atom, do it on Kepler. 3 wallets, best. Just, my honest opinion. Third of all, we have yield farming. Yield farming is when you prove liquidity to decentralized exchanges and earn fees and rewards in return. High risk, high reward, and one of the best ways to multiply your stack during a bull market. The trick to DeFi? Don't chase the highest APY. Chase protocols that survive bear markets, because if the project dies, your yield dies with it. Now we cover 3 ways on how to make money in the crypto markets. We'll go way more in depth and we'll cover so much more on this channel, so make sure you're subscribed. As a final boss tip, let me give you this. Every time you buy crypto, ask yourself something. Do I think that this asset will multiply in worth? Or is this asset making me money while I'm sleeping? If the answer to both of these questions is no, don't buy it. And if the answer to any of these questions is yes, buy it. If the answer to both of them is yes, fucking ape in, go all in, just take all your money, buy it. That's of course a little joke. Always, and that counts for every crypto project, even for Bitcoin. Yes, Bitcoin is studied thoroughly, but yeah, you should always do your own research. You need to know what you're buying. If you just buy things that shine, well, you're gonna be the first one to have no more money left when the bear market hits. Don't be that guy. Be the guy that makes silent moves, that is steadily increasing his stack, his wealth, his net worth. Be a winner. Don't be one of the losers that makes $1 million with a meme coin just to lose $1 million on the next meme coin he buys. Where's the point? Crypto is the way out of this simulation. If you're ready to break this simulation and join the movement, hit that subscribe button, hit the like button, leave me a comment on what you want to see next, and I'll see you in the next video. Jam.
Bags, then laugh in the shade. Running up digits, I'm too well paid. Crypto king, I don't miss. Money too long, got the world on my wrist. Solana up, Bitcoin lit, Lambo so clean, and the doors do this. Crypto king, stacks too many.